buzzword of the week, I guess. And on Friday, you had peak pessimism. Yesterday, you had peak optimism around the virus not being as bad or showing kind of less predominant symptoms. But then today, again, it's now mixed. Like you said, the CEO of Moderna came out with some comments. So it's a bit of oscillating between, is this really that bad? And is this going to cause the recovery or global recovery in COVID to be kicked down the road a little longer? So, I mean, markets are struggling a little bit with that. And I think that'll largely dominate what markets do over the coming weeks. And again, the knock-on effect of that, does it then imply more supply chain issues and inflation? And so I think largely it's going to depend on what happens out of this Omicron. But I think there's still a lot that needs to be figured out, a lot that needs to be communicated. It's still early days, so I'm happy to sit tight from here.
Right. I was actually going to ask you on what you think the biggest risk to the market is, whether it's what we're dealing with right now or is it longer term dealing with the idea of inflation. But let's bring it down locally for a bit. I mean, there were news a little bit earlier on out of Adept IT. They published their schedule in terms of what to expect regarding the suspension of shares and the delisting as they wait for the Zimbabwean regulator to give approval for the Valaris offer. However, which then brings us to a conversation around what is happening around the Johannesburg Stock Exchange, the JSE, as it relates to a lot of these companies that are delisting. And what we're starting to see here is that you get these foreign companies that are seeing something when it comes to our particular companies. What do you think it is that foreign companies are seeing with our local companies that's allowing them to say, you know what, we want to get involved in this and take it off the market?
So I think your point is well made around foreign companies coming in, but it's also local companies as well as local management teams that are coming in and buying assets and taking shares off the market and delisting them. And I think that's for a couple of reasons. I think predominantly is that these companies aren't being kind of valued where they think is appropriate. So you're not getting the multiple that you should be getting on your business while being listed on the JSE, which makes your business actually quite cheap. And so you've got these assets that are cheap, specifically in the kind of small and mid-cap space, as you've seen with a lot of these kind of delistings that have gone on and that are kind of in the woodworks. But it's also got to do with the fact that these companies have good profiles. I mean, yes, you can talk about South Africa and the GDP and the like, and maybe the backdrop not being the best from a macro perspective. But a lot of these companies have really, really good growth profiles. So you've got companies with good growth profiles that are looking very, very cheap. So it actually makes sense for a private equity business or an offshore business or a local business like Standard Bank taking out Liberty. I mean, the opportunity is there to be accretive from day one. So I think that is the one thing because, yeah, again, they're not trading on the valuations they should. There's no real liquidity in the local market. And you also haven't seen a lot of new listings in the JSE as well, which is just very indicative of where we are at the moment.
So we had, in addition to that SANS announcement, we had a trading update from Nampak and FirstRand. Which of the two do you want to talk about? Which one did you find interesting?
I can go through them both very quickly because they're both very short updates, both trading updates. So not a massive amount of detail. Standard Bank with a very, very good update FirstRand with a very good update as to be expected. This is largely on the back, they bounced largely in the back of positive risk sentiment yesterday, as well as Standard Bank's positive results yesterday as well. So the share price hasn't moved massively, but this is still a great business. I think it's kind of the gold standard from an ROE perspective, and one that I'm very happy to own in the long term. Nampak, positive update that's come out. They're actually positive again from an earnings perspective. The kind of corresponding period was they made a loss. So they've returned to positivity, but I think largely the kind of rebound or the recovery has been priced into the shares. So happiness in the sidelines of Nampak, very happy to own FirstRand.
Right. So I mentioned earlier that we're going to be talking about Twitter and we're going to get those graphs on screen. But Jack Dorsey announcing that he is stepping down. This marks the end of his second stint as CEO of Twitter. There was some criticism around, the particular company in the sense that they were falling behind rivals such as Facebook, especially when it comes to the renewed pace of product launches and innovation. What do you make of Twitter's share price year to date? We've got that on screen for our viewers, but analyzing this particular share.
So I think with Jack, the CEO of Twitter, I think basically people have been not very happy with him for a while, and that's for two reasons. One, you see he also shares the CEO responsibilities with his company Square, the payments business. So people say that he's not actually really completely focused on Twitter. And the other thing is there's criticism with him around not being able to monetize Twitter properly. So while it's a great platform from an interaction perspective, it's not getting the traction from a monetization perspective that some of the other platforms are getting. So people are actually investors are actually quite happy with the fact that he's getting replaced because they think that the new CEO will be more focused and be able to monetize his business in a way that he could never. So I think potentially positive. You saw the share price react very positively when that news was made. But I think let's also wait and see if this new CEO can actually do what people are hoping he can do.
Before I let you go, quick one. Would you hold it, yes or no?
I think there's opportunity in other big tech. I'd still hold Facebook over Twitter.
All right. Thank you so much for your time. That is Martin Smith, who is a portfolio manager at Anchor Capital, talking to us about the market developments, the latest market developments, that is, and whether he would own Twitter as a share. Perhaps Facebook is the better alternative to own between the two. We're going to take a quick break. When we come back, we'll be analyzing those unemployment figures for you. So stay tuned.